All right, guys, we're live here today with Jeff Schneider. You're in Stewart?
I'm in Stewart.
In Stewart with SFS Tax and Accounting Services. I've got all those links up in the comments, so you can go check it out. But we're going to get into some information right now that has been I'm in a lot of real estate groups, and so many people are asking about the different options, the loans, the grants that are going on. They're having a really tough time submitting them. They think they've got it set and submitted, and then they hear back that nope, the rules of the game have changed. And it's gotten really frustrating for people. Not only is it frustrating, it's time consuming. They are not professionals. I am not a professional in this industry. So having somebody like you explain the ins and outs of everything that's going on right now is such an incredible help. So I sincerely appreciate it, my man.
My pleasure. I appreciate you having me.
Absolutely. So give us a little detail. I know you and I specifically have talked about two big things, but tell us all of the options that there are right now with the government and what's going on.
Well, there's three big options, or actually two big options. One has to do with the loans with the Small Business Administration.
Yep.
That has to do with loans and grants, advances, and payment protection. I'll talk about that in a second. The CARES Act and the Families First COVID Act, FFCRA, that is the one that the Congress passed a lot of credits. If you have under 100 employees, you're required to give people paid time off if they qualify under one of 6 different categories.
Yep.
And if you do have to pay them, you get a credit. I'm not going to go into the details of all the credits now, because then I'll probably blow everybody's mind out. You can talk to your EA, CPA, or your attorney, or whoever does your tax returns, or does your payroll. If you have an outside company, they should know this, but you should make sure that they're taking advantage of the credits. There's basically 3 different credits. So there's a paid family leave credit, a sick leave credit, and the employee retention credit. So those are things I wanted to get out of the way, and you should just make sure. But that's under the tax side. What Joe and I are going to be talking about today is the actual 3 loans through the SBA. Now, that's the big fallacy. 2 of the loans are direct with the SBA. Everybody thinks everything's through the SBA, and it's not. 2 of them are through the SBA. 1 of them is through banks, but guaranteed by the SBA.
What's the SBA?
Small Business Administration.
Okay. Got to throw you some softballs here.
Yeah, right. So used to doing acronyms. IRS acronyms. So I talk acronyms. The main thing, there's 2 loans and 1, like Joe, you called it a grant. It is now called an advance.
Yep.
So let's talk about the first, what I call the big loan. That's called the Economic Injury Disaster Loan. That is actually a loan with the SBA. You have to go through underwriting. You have to have a credit score of 640. If you don't have a 640, you can't apply no matter what your financial hardship is, because you have to give a personal guarantee, and that's the required minimum.
Yeah.
You should talk to your accountant to see how you can get your score up if you're close. Canceling credit cards. I'm not an expert on credit, so you have to talk to somebody who is to get your scores up, whatever that may be. The loan is based on financial hardship. There is nothing anywhere that specifically mentions what that definition is. And this is when you were saying there's so many things that are out there, we don't know what. There's no guidance on a lot of this.
Yeah.
What we're thinking is you take what you made last year, what you made for the first 3 months this year, and because you have to provide projections for the rest of the year, you figure out the difference. And if you're making less, that's your financial hardship. For example, in my industry, I haven't been hit yet, knock on wood. I'm still doing tax returns. I'm still doing accounting, still doing payroll. So I haven't been hit. I'm doing all this stuff. So the only thing I'm not doing is resolution work, because the IRS is basically shut down, which is a good thing for you guys, not so much for me and my business. But that's part of what we're dealing with. So that's a loan. It's a 30-year payback, up to 30 years, no prepayment. That's why they say up to 30 years. You can pay it back anytime. But the rate is only 3.75% fixed.
Wow.
Which is not a bad thing in the first place.
Yeah.
So that's what I call the big loan.
Is your only option to do it over 30 years, or can you do it short? Can you?
The loan itself is amortized over 30 years, but if you want to prepay it. You know, if say, for example, you borrow $30,000, and let's assume with the interest, it's $1,000 a year to make the you can pay that $2,000 a month, so you cut it in half.
Yeah.
So like any other mortgage, they're not going to complain you paying them off early.
Yeah. You're not going to get a better deal, though, a better rate.
No, back in the day when I
Okay.
was in my younger days, back when I had no gray hair, and I did my first mortgage, they had prepayment penalties.
Yeah.
That you couldn't pay it off early. That kind of went away in the late 80s, early 90s. So this doesn't have a prepayment penalty. So that's good.
Okay.
This is totally, these three things, and let me go take a step back. These are totally what I mentioned before about the credits and mentioned just now about this loan. This is totally different than the $1,200, what we used to call the stimulus rebate. It's not called that. It's called the recovery incentive payment. You're going to get $1,200 if you file for a single person, up to $2,400 if you're joint, $500 for each kid 17 or under. And there's income limits. So you need to make sure that you're, if you didn't file your 19 return, it's not a big deal. They'll look at 18. The only way you should file your 19 return in a hurry, even though it's due July 15th, if you made more money in 18 than 19.
Yeah.
If you're over the limit. I'm
75.
doing more of those than regular returns for clients whose income went down last year. They
Yeah.
were over the limit, or vice versa. They're over the limit now, and I haven't followed them. They said,
Yeah.
this way they can get their money. Once they tell me they get their money, then we'll finish the return.
So can I ask you two questions on that? I mean, I know we're sticking with the loans here, but everybody is asking. First question: do you know the timing of that? When does it come out?
Which one? The $1,200?
Yeah.
They're saying now within. I heard two reports. Secretary Munchin, who's the Secretary of the Treasury,
Yep.
said beginning of the week or the end of last week, 3 weeks
For everybody.
for everybody. For direct deposit.
Okay. Yeah.
Direct deposit.
I was seeing like tiered timelines that extended months out, and I've just seen so many things.
Yeah.
I wanted to hear it from.
He said 3 weeks. My latest information is it's supposed to be mailed out this week. We're already on Wednesday, so we'll see what happens over the weekend.
So another
Nobody's got any.
Yeah.
So,
Another rumor I've heard is that money is not given to you. It's essentially rented from your next when you do your taxes next year. Is that true or not?
Not necessarily. The way that it works is that it is a 2020 credit, but it's not offsettable against anything. Even if you owe back, other than child support, if you owe back taxes, for example, they're not going to withhold it. As opposed to what happened in 2008 when they did the same type of rebate. If you owe back taxes, they kept it.
Yeah.
This time they're not, because this is worse than it was in 2008. At least 2008, unfortunately, was just the real estate and ancillary businesses. This is affecting everybody.
Yeah.
So they're not doing that. However, if you didn't file and you claim too much, too little, and your income is lower, and you make the debt, say for example, 2019, you're over the limit. When you file your 18 return, you can take a credit then.
Okay.
I haven't seen anything where it's reversing.
Okay.
Because it's not offsettable. You get the money, you keep it.
All right. So going back to that first loan, what is how does that look? Like how much are people getting? What's the maximum? What's the average?
I can't tell you the average. I have no idea. I haven't done any of the EIDL loans because it's pretty expensive to do from my standpoint, because you have to give tax returns. You have to give personal tax returns, business. Remember, it's not you, the individual, unless you're self-employed without an LLC or an incorporated entity or a partnership. It's you, the business, that is applying for any of this stuff, any of the loans, or this grant that I'm going to get into, not you personally. So you have to give personal financials because it's a personal guarantee. You have to give corporate financial, corporate projections, sales over the last 3 years if you were in business for 3 years. You have to give, like I said, the tax returns. You have to follow up a lot of paper. A lot of my colleagues, some of them are doing this, what we call the EIDL loans. Nobody has gotten any money yet. I think one person said my client was funded, but no details, so I don't know. Nobody else has said they got anything through. That is directly through the SBA, so it's a little quicker than the other loan I'm going to talk about and the problems with that.
Okay. All right. Loan number 2.
Okay. So before we go into the loan number 2, there's a second piece to loan number 1.
Okay.
And it's on the same website. It's called like I said, it was called before the grant. The grant was $10,000 per business.
Yeah.
No questions asked. If you had a business, you were in business in 2019, we have to put a couple numbers, answer about 6 or 7 screens worth of stupid questions that make no sense. But you have to answer them. And Joe knows that he had to answer 2 of my questionnaires that changed like 5 times.
Yeah. The more the merrier.
4 days. So that was what it was. Everybody's going to get 10 grand. Wow. Is that a great deal? No payback, no offset against anything on the grant, but it does offset something later, possibly. Well, they changed their rules as of last week, and we're still waiting for guidance more so on this. Now they're saying it's $1,000 per employee, which is totally unfair, because if you have one person or you're just self-employed, it's just you, myself, and I, you can't go for three people. That's one. You're going to get $1,000. I have one client, up to 10 clients. That's up to the 10,000. I have one client that has over 10 employees.
Yeah.
I have everybody else in the 1 to 4 range, including myself. So we think that's ridiculous, but it is what it is. So nobody's gotten fun with that either. That was supposed to be within 24 to 48 hours of making the application. Well, that changed real quick. Then they said 48 hours of an approved application. Well, I don't know the approval process, considering there is nothing they're checking. So you can't, they're not asking for financials. They're not asking for payroll information. They're asking for gross receipts. They're asking how many employees you have. I could have put 40 and they wouldn't have known unless they asked me based on, I guess if you make $100,000 gross revenues, you don't have 40 employees.
Yeah.
So, I mean, maybe that's what they're looking at. I have no idea, but that's the only information they're asking for per se. There's a lot of other verbiage in there that you got to check boxes and fill in information about ownership and things like that. Every owner has to be on it if you have multiple owners. There's no personal guarantee. It's the company's money. Whatever you get, you get.
So I read somewhere too that there was a requirement. If you were given this money for having employees, the requirement was to maintain their employment. And if you didn't, then you lost something.
No, that's the payment protection. That's the paycheck protection.
Okay.
There is the rule is that you're supposed to use this for payroll, this and to keep your doors open. That was the whole idea.
Yes.
You're not supposed to take a bonus. You're not supposed to pay personal expenses. It's meant to be to keep your doors open. Pay your rent, pay utilities, pay your payroll, pay your taxes, and anything else related to your business. That's the whole purpose of it. Are people going to use it for anything else? Sure they are. Are they going to tell anybody? No. Do they have to tell anybody? No. So that's the way that works. There's no cross-checking. There's no audit procedure. It's not it's not IRS. This has nothing to do with the IRS. There's no audits from the IRS. There's no taxability on any of this. Now, let's talk about the other loan. This is what all my clients are going for if they qualify. Now, let's talk about the self-employed first. You can't apply until Friday. That's the first thing. The system went online, and I'm crunching my head a little bit, went online last Friday. That's a bunch of malarkey. The government doesn't even know what the banks, this is through the banks, didn't even realize the banks weren't ready. They were supposed to have online processes or in-person processes. They had nothing, because they said you keep changing your mind, so they kept delaying. So then Monday, some of the banks started working. Wells Fargo, for example, basically said, we're done. One day they said, we're not doing any of this anymore. So the banks are like fed up with the SBA, the Small Business Administration. All right, so now what you do, it's based on payroll. First things first, you have to have a net profit. If you don't have a net profit, you don't qualify. The second thing is you have to have payroll. Payroll is, for the self-employed, net income. Hence the reason why you need a net profit.
Yep.
If you have a loss, that's not your payroll. If you're an S Corp, even though you may be a single owner, you have to be on payroll, reasonable comp. So now you're on payroll, so you have payroll. But if you're just an LLC following a Schedule C on your 1040, you have one person, which is you, you take your net profit. Now, if you do have people working for you, like a lot of realtors like yourself, Joe, may have employees, administrative people. They may have a full-time photographer, whatever.
Yeah. And
you pay them through payroll, not 1099s. That's a big thing we'll talk about in a second. But right now it's payroll. W-2, we'll have to provide them a tax return. That's what they're saying. I haven't heard back from the bank that I'm now working with what exactly they want. I'm waiting for an email. I did 3 applications this morning. Tax return, 941s, and payroll records. Basically, if you use QuickBooks, you print out a payroll sheet. So that's what I do.
Yep.
Just to show ownership, show your profit, and show your payroll. And the 941s back up the payroll sheet, because that's the government form. As opposed to you using a payroll service, which you can get that record from the ADPs, the paychecks, and whatever payroll service you're using. All right. Then you take that payroll number and the payroll cost, and this is what they changed. Originally, payroll costs included independent contractors.
Yeah.
The regs flipped it and said no, because it's double dipping. Well, who's double dipping? Not us, the independent contractors, because they can file this on their own and qualify.
Yeah.
Well, so that's screwing, for example, the realtors.
Yeah.
If you have 1 or 2 employees who has a small payroll. I have a lot of people in the construction industry. They pay themselves a low amount because they sub everything out.
Yep.
So the biggest number, 5-10 times their payroll, is independent contractors.
Yeah.
So they're getting royally the shaft with this new rule.
Okay.
So payroll cost now only includes gross payroll. Remember, gross payroll or net income from your Schedule C. If you're a partner in a partnership and you get guaranteed payments, not the net profit from the partnership, but guaranteed payments, which is like your 1099. I have a realtor who's a partner, is the broker in the partnership. She gets a guaranteed payment, not subject to income, not issued a 1099, but she now has a guaranteed payment. She would qualify because that's like a W-2 and or a Schedule C item, even though that's reported elsewhere. Okay. So now, when you figure out that, you add in your share, especially if you have payroll, your share of the health insurance that you pay for your employee, your share of any retirement. So if you give a 401k, I have a client that does a simple IRA. He puts in what we call the safe harbor. It's 3% of their annual salary. They put in whatever they want. And he puts in 3% to make this next thing. That we add. That's a big number for some people.
Yeah.
That's payroll cost. That's it. You divide that and you look at all last year. Now, if you're seasonal, there are different months that you can look at, and you'd have to go. And there's a lot of different scenarios, which I won't get into here. But if you weren't in business all of last year, you can look at different quarters, or if you're seasonal, different quarters, or the first quarter of this year before the COVID-19 hit. Then once you figure that number out, you divide it by 12, times it by 2.5.
So you're essentially getting 2.5 months worth of your average.
Your monthly average, right?
Yeah.
Now, this is the funny part. They're giving you 2.5 months of money, but this program is an 8-week program.
8 weeks, yeah.
8 weeks. And here's the other downside that they changed. Let's assume you get $24,000 based on the monthly average times 2.5 is 24,000. You don't see why I'm saying this. You have to pay 3/4 of it in payroll costs. Now, payroll costs I just mentioned.
Oh, so 18 grand has to be payroll, but it has to be payroll over 8 weeks.
Over an 8-week period.
Yeah.
It includes yourself. It includes not payroll taxes, but it includes federal unemployment tax, state unemployment tax, any other state and local taxes. Now, we don't have that in Florida, but for those around the country, they have their own little nuances what you have to pay. Like New Jersey has a disability payroll tax, for example. Well, they used to. You have to pay that. That gets included. The 75% is basically all your gross payroll, rent, and we're not talking about for your house. We're talking about rent if you have a space, because it's meant to keep the doors open. Utilities, gas, electric, water, whatever. And if you had a secured loan prior to February 12th, you can take the interest as part of this 75-25. But the big part is 75 has to be payroll. Those 3 numbers. Gross payroll, health insurance premiums you pay, and the retirement account.
Okay, so let me ask you this. Let me run a couple scenarios by you. So I get $24,000 and my payroll is only 10 grand. Let's use an easier number, 12 grand.
Right.
That and I've got another 12 grand and all those other good expenses that you said I can claim. I can't claim all of that other 12. I can only claim 4 of it because 75% of my claim has to be payroll.
Well, and when Joe's saying claim, the reason for that is this is a perfect segue. The claim he's mentioning, this is a forgivable loan. And to make the loan forgivable, that's where the 75-25 split has to come in.
Yeah.
Joe's example, if he paid $12,000 in payroll and $12,000 in everything else, he doesn't qualify because he didn't pay the $18,000 in our example.
Yeah.
Payroll or payroll costs.
Yep.
So the other 12 in this example is not forgivable, but it's not so bad. You have to pay that back.
Yeah. So 4 of it is forgivable.
The first 12 is because you paid
the 12 in payroll plus another 4 of the other 12 for other stuff, totaling 16.
Well, that's what we're waiting for guidance of. They want
Okay.
75-25. So there's nothing that says, and I have a call into somebody about that because I knew that was going to be a question, that if you don't make the 75-25, none of it, that's the word out there, that none of it becomes
What?
forgettable, because the agreement is you're going to pay 75-25.
Yeah.
Say
Yeah.
it like that, but I'm telling you both ways.
Can't you just claim? I mean, how would they know?
Well, it's like anything else. And how many tax returns I do, they say, can you just put down $300 or 300 miles? How are they going to know? Well, first of all, I'll know. And I'm signing the application if I do it for you. If you do it yourself, if you want to lie, you lie. How they're going to know is because you then have to go back to the bank and prove to them your forgivable amount. You have to provide them receipts because they're forgiving the loan. Even though they're going to go back to the SBA is going to want to see this.
Yeah.
They're not going to want to see any of the other documentation, but they're going to want to see what you're going to forgive or what they're going to forgive on you.
Okay.
So you got to be careful. Don't be. I joke with my wife, and the difference between a pig and a hog.
Yeah.
Right. So don't be a hog. You don't want to be slaughtered. Just get fat.
Okay. So here's my next question. So I get $24,000, and let's say I do it right. And I spend 12 on payroll and another 4 on whatever else that is good. So I'm at 16. I didn't use 8 of it. So if I get 16 forgiven, what happens to that other 8?
Well, any monies, forget about the two scenarios, whether they're going to allow you to match. Because the thing is, you have to make the 75-25. I think at your example, it's not going to be forgivable because you didn't do the 75-25 of the loan. So no matter what the loan,
not of my total expenses.
No, the loan amount.
Gotcha.
I'm sorry.
Okay.
I wasn't clear. It's the loan amount. That's why I did 24. That's where the 18 came from.
Yeah. That makes sense.
So you got to do 18 of payroll, 6 of the other expenses.
Okay.
Now, you don't even spend that 6 on qualified expenses. Let's say you pay it on, and telephone is another one. If you say you spend it on advertising, that's not qualified. You may make the 75. But you didn't make the other 25 was not excludable. Now, here's the thing that's why I say if you spend the 12 and 6, is the 12, even though it's under, does that qualify? I don't think it does because it doesn't meet the 25% rule of the loan, 75% of the loan. But let's say you do 12 and do nothing with the other 6. You have 6 left in the bank. You have to repay that 6. You have 18 forgiven. You pay back the 6. Now, how do you pay that back?
What are the terms?
The terms are 1% over 2 years.
1%.
Yeah, that's the changes that went through 3 times. It was 4% over 10.
That's great.
0.5% over 1 year. That was Wednesday at 4:45 p.m. last Wednesday.
Yeah.
11 o'clock, they dropped it. They raised it to 1%, which is still unbelievable.
Raised it to 1%. Okay.
Now, they are giving you a deferral of 6 months where you don't have to make a payment. So after you get funded, you count the 8 weeks. Let's say that's June 30th. You have to technically, you have to start paying it back July 1 or whatever the date comes out to be.
Yeah.
They'll give you a 6 months deferral, which is the end of December, beginning of January. However, that 1% per year accrues. Now, but if you borrow $25,000, 1% over a year divided by 2 is what? $250?
Sure.
Right. So.
Come on, man. I'm a realtor.
So you did the 75% of the 24,000.
I know.
But that's what they're talking about. And the payment plans are phenomenal. There is one caveat. Remember when I said the grant was not not repayable? You didn't have to pay that back. It's not offsettable.
Yeah.
It's your money to keep. However, if you do get this what we call the PPP loan, it's the Paycheck Protection Program loan. If you get this loan, the amount that's forgiven, and let's use your example of 18,000.
Yeah.
And you got 5. That 5,000, yes, technically is yours to keep, but it reduces the forgivable amount. So the 18,000 forgivable becomes 13. So instead of owing back 6, you owe 9. Do you understand what I'm saying?
Yep.
Okay. Yep. And if the audience has any questions about that, that's the caveat of the loan versus that advance.
Okay.
Now, that advance, if you go for the big loan, that SBA loan, that's why they're calling it advance. It does reduce the amount of the loan that you got. So in other words, if you apply for a $200,000 loan, which is the max you can get without collateral, I didn't mention that before. It's $200,000 without collateral on that big loan. You only will get 190, but pay back, and the 10,000 goes.
I gotcha. Yeah.
So,
Yeah. Okay.
But because that's why they changed the name, I think, to an advance. Where a grant confused everybody, because everybody thought a grant you have to get all these applications in like a government agency. No, you don't.
Okay. All right. Liz is saying she's got an LLC. She's self-employed. She's unable to work due to not being able to travel to her clients. She does interior design. She takes a monthly draw, not a paycheck. Does that count as payroll?
Well, the first question, Lisa, answer this question. Are you an S Corp or a sole proprietor? You can still be an S Corp as an LLC.
All right. We'll give her a minute to reply to that.
All right. Let me answer it this way. If you're an S Corp, you have to be on payroll. That's the law.
The owner.
Everybody who works in a company as an S Corp is an employee, whether you own it or not. There's no such thing as drawer in an S Corp. There is, but generally you have to take reasonable comp. Assuming you're a Schedule C, which means it's called a disregarded entity. You don't follow an 1120S. There is no payroll for you. Self-employed individuals, even if you're an LLC, but as long as you follow a Schedule C, there is no payroll. You can take a draw. That's the net, but that's the net income that they count. They don't count what you take out. They count what you took as a net draw. So if you look at your 19 return, your net income is 24,000. Divide that by 12. That's 2 times 2.5. Your loan will be $4,500. Okay, so she said sole proprietor. So that whole explanation was for her.
Okay, perfect. Okay. Guys, if you have any more questions, we're going to chit chat here for a couple minutes, but feel free to put anything down in the comments and I will share it here with Jeff. He can answer your questions. Jeff, who do you help? What if I live in Northern Florida? Can you help me? If I live in Kentucky, can you help me?
Doesn't matter. It doesn't matter. This is an SBA or Small Business Administration loan or program. It is a national program. Besides the fact as an enrolled agent, I'm nationally licensed. I can help anybody anywhere with taxes. But as far as this is concerned, it doesn't matter.
Okay. I've had so many people ask questions about this, and it's, for me, you've been a huge help because I am busier than hell. And to keep up with all of these changes, and like I said, man, I'm just a realtor. So I don't know this stuff. I can tell you all about housing all day long, but I don't know this stuff. And then as soon as I do know it, it changes. And I don't do it like you do it all day long, so I'm not going to see those changes. So it would be an absolute headache to try to do this myself. So I can't tell you how much I appreciate you helping me through this. I've got another question here from Gordon saying he's a realtor and he receives a 1099 as an independent contractor, self-employed. What do we put on these apps?
Sole proprietor.
Sole proprietor. Okay.
There's a category for that.
Yep. All right.
They're using independent contractor different than sole proprietor. I don't know why. They gave a dumb reason, but same thing. 6 of one.
SBA?
Yeah, half a dozen of another.
Yeah, okay. Okay. And you did allude to this a little bit earlier, but what do you see as the timeline for these things coming out? You think this is fairly immediate within a couple days after application?
Well, it's supposed to be an immediate once the application is approved.
Yeah.
I can't tell you because remember this thing has been delayed. It was supposed to be
numerous
parties ago.
Yeah.
It was supposed to be April 1st, then delayed to April 3rd, and then the banks weren't ready. So once they get the applications, I'm presuming if they do it online, which I did the application, now I'm waiting what forms I have to upload to justify what I put.
Yep.
And they're going to have somebody look at it. Like anything else, these people are inundated. That's why a lot of the banks are saying we don't want to take non-clients. I finally found a bank that is allowing us to do it. And like I said, I submitted 3 today. Nobody has this bank in Minnesota, or they're in Minnesota and Iowa.
What are they getting out of it? What's the bank getting out of it?
Well, the bank on the back end, we're not allowed to charge for the Paycheck Protection Program. We're not allowed to charge. There's rumors that say that we can charge 1%. That's no. We do charge for the other loans. We charge for things we do related to the paycheck, the consulting part.
Yep.
But we do not charge for the Paycheck Protection Loan Program loan at all. It's against the law. I am an agent to that, not an enrolled agent, but what we call an agent, which I can. As long as you give me authorization and you sign a form for me saying I do hereby authorize, blah, blah, blah. Okay. The banks make 5%
on the back end
from the SBA, not on you. You get charged nothing for any of this. There's no closing costs on the big loan. There's nothing for the grant. There's nothing for this loan. If you do it all yourself, you pay nothing.
But this is all unsecured.
Other than the big loan over $200,000, but everything else is unsecured, and only the big loan has a personal guarantee. The PPP, no financials are given, no personal anything, no personal guarantee, nothing.
Wow. Man, that's interesting. Is any of it guaranteed by the SBA?
Yes, guarantee for the banks.
Yeah.
So if you don't pay back that 1% over 2 years,
the
bank goes back to the SBA, just like any SBA guaranteed loan.
So if they're guaranteed their 5%, why would they not open it up to non-clients?
Because 5%, think of it. The average small business with payroll divided by 12 times 2.5, it's only maybe 10 to 25,000. Maybe at one client that was over 100,000 so far.
Yeah.
It's a big payroll. But just say if you do 25,000 times 5%, they made $1,250 to take this. And that was part of the problem with the banks. They're taking such a risk for $25,000 if it's all non-forgivable.
Yeah.
Everybody's going to follow the rules. No.
Yeah.
So they're going to probably have to pay this back. So multiply 25,000 by 1 million people. That's a lot of money. There's $350 billion, $349 billion out there for the taking. The banks are at risk for this.
Yeah.
Now, I'm not saying it's all going to be PPP loans. It could be the EIDL, the big loan, and some of it's going to be the grants, but still, they're on the hook for everybody who does just PPP.
I might have misunderstood you. I thought you said that they were not on the hook for it and the SBA backed them.
They're still on the hook and they have to wait for the SBA to pay them.
I see what you're saying. Okay.
So they can be up, this is government. So you think they're going to get paid right away?
No, I get it.
So, I can't tell you the back end of the banks versus the SBA.
Yeah.
What defaults they have and what remedy they have.
Yes.
But they still have to lay out money for at least 2 years at 1%.
Yeah. That makes sense.
That's lower than prime, and though it's higher than the discount rate.
Yep. So I can tell you guys, first of all, Jeff, thank you so much for your time. I sincerely appreciate it. If you're on the Treasure Coast, he is by far the most intelligent tax stud. I don't know what you call yourself legally, but I'm going to call you a tax stud that I've ever met in any state. And I am a numbers nerd, and I'm telling you, he is 17 times smarter than me. So it's awesome having him on your side. And if you are running a small business and you're busy like I am, and you don't want to waste all that time or invest all that time putting that stuff together, Jeff will put it together for you. Jeff, I've got your email and your phone number, your website, your YouTube, your Instagram, all that stuff in the comments. What's the best way to get in touch with you if these guys want to reach out and get that started and have you do it?
Phone, because I will talk to them specifically. Email's not good because everybody's a different situation.
Yeah. Even
between realtors or even between contractors. So this way I talk to the individual about the different programs, and then we work out, because I have a secure portal. People do it by fax. People do it by email. I have to send you papers. You have to send them back and blah, blah, blah. And we have to go through the whole process individually. I'd rather do that than somebody asked me a question, how do I start? How much does it cost and how do I get started? I told you the SBA doesn't charge anything. That's the only question I can answer them. How do I get started? You have to talk to me on the phone.
Yeah. Yeah. Even you and I, you were like, well, if you do this, it's this. If you do this, it's that. So there's a lot to it. And you're right.
Just call me. It's much easier.
Yep. It's efficient. Yeah. Okay. Liz had asked for your contact info. But again, Liz, it's up in the comments. If you go check the comments. If for some reason I messed up, I will make sure that it's in the comments after this. But I'm pretty sure it's up there. Again, Jeff, thank you so much. I sincerely appreciate it. And we'll see either you or Allie on Tuesday morning, my friend. All right. Have a good one.